What's going on, guys? MMuniz here. Welcome back to the channel. In today's video, we're going to discuss one of my favorite dividend ETFs, SPHD. Now, as long as you're not living under a rock and you have some idea of what's going on in the economy, you probably have realized that the typical indexes that people talk about, the S&P 500, the NASDAQ, these are down considerably from their all-time highs just a year ago. We're seeing decreases of 15% for the S&P 500, almost 25% for the NASDAQ, and honestly, there's no end in sight. With what's planned in the near future, we're going to see continued rate hikes from the Federal Reserve, and more than likely, that's going to continue to make stocks go in the wrong direction. However, as with everything, there's still ways to make money even in a bear market or a recession. Now, I'm not saying that SPHD is a way to make money, but for some reason, and we're going to talk about why, SPHD is doing pretty fantastic over the past year and year to date. And honestly, over its history, it's not the best performer, but it has shown considerable gains over time that are consistent and steady long term, which is pretty important when it comes to investing. So if you stick around for the video, I'm going to tell you what exactly SPHD is, what it invests in, how it works, what is the strategy of the fund, who should be investing in this fund, and my personal thoughts on it, because there are some considerable downsides that we're going to talk about as well. Now, before we get into the video, I do have to disclose that I'm not a financial advisor. This isn't financial advice. This is just an opportunity for you guys to see what I have to say, do your own research, and then you guys can decide what is best for your family. Now, if you like making passive income, you're interested in investing or fitness, I do weekly videos on anything personal finance or fitness related. So make sure you smash the like button down below and subscribe to the channel. And let's start this video. Okay, so first things first, what exactly is SPHD? Well, SPHD is an ETF, an exchange-traded fund, named the Invesco S&P 500 High Dividend, Low Volatility ETF. SPHD has been one of my favorite staple dividend ETFs because it pays monthly, which is different. Most usually pay quarterly, and it has a relatively high dividend, as you can see by the name, which over the past 12 months has been an average of 3.36%. So SPHD was made in October 2012, and it has an expense ratio of 0.3%. Now that's pretty high. That's $30 out of every $10,000 invested. It's not as high as some of the covered call income ETFs that I talk about, but when we compare it to something like SCHD, for instance, which only has a 0.06% expense ratio, that is a considerable difference and can really make a difference and affect your returns in the long term. So just keep that in mind. It has a pretty high expense ratio. But as I said, it does pay monthly, which sometimes you got to pay for convenience. So we mentioned that the title has high dividend in it. And to be honest, with a 3.36% dividend yield, I would say that that is pretty high for an average dividend ETF. Now, it doesn't compare to some of the covered call income ETFs that we discuss on my channel, like Q yield or R yield or even X yield. But one thing we have to remember is that this ETF only holds the actual assets. It does not perform any options. It does not generate any option premiums on a monthly basis. So that's why you're going to be considerably lower. But there are benefits to that, and we're going to talk about that later, one of them being taxes. Now, the current price of SPHD is around $47 a share. And if you look at the recent dividend history, you can see it ranges from 12 up to about 14.5 cents. So per share, you're going to be getting around 14.5 cents. So what does SPHD do? What is the actual strategy? Well, it seeks to hold around 50 assets, and it rebalances semi-annually. Now, the way that it chooses its assets inside it is it takes the top 75 highest paying dividend assets, and then it takes 25 of those, gets rid of them based on if they are the most volatile. So it's looking for the highest dividends, but the least volatility. And that's why the title is High Dividend, Low Volatility. Now, one thing to keep in mind, though, is that it advertises low volatility, but you are still subject to any movements of the assets that are in the actual fund. There is no protective collar. There's no put option that's going to protect you from a market crash. If the market crashes and the assets that are being held within the ETF go down, then you're going to see that as well. However, when we look at the sector allocation, you have utilities, consumer staples taking up the majority. Stuff like that, large cap value, mid cap value, we don't see any small cap, we don't see much growth, we don't see any growth. That means that there's going to be less volatility. So when we compare this to QQQ, for instance, you're not going to see as much price movement. But one thing to remember is volatility goes both ways. So just because we have less volatility on the downside, that also means that more than likely our net asset value, which right now is around $47 a share, is not going to be skyrocketing either. So when the market starts moving up heavily, we're not going to participate in as much upward movement, but we will still see some growth. So now let's take a look at the recent performance. So year to date, the SPHD ETF has significantly outperformed the market. Now, when I say that, I mean the S&P 500 and especially a growth fund or growth ETF like QQQ, which follows the NASDAQ 100. Everything, including SPHD, is seeing significant losses this year. And when we go back to the 1 year, it's still the same story. Still, SPHD is outperforming. And when we look at this compared to the indices, the indexes, S&P and the NASDAQ, it doesn't actually factor in the dividend. So remember, SPHD is providing that almost 3.5% dividend that's paid out every single month. So you're getting a pretty significant return in the past year. So in the 1 year, SPHD is doing fantastic. However, when we go to the 5 year, it tells a different story. And this is where you're going to see that low volatility is not really the best thing in the world. So as we could see, over the past 5 years, there is not much growth for SPHD when all the others grew considerably. But I will point out that even though it advertises low volatility, like I mentioned before, even large cap stocks, large cap value, they can still drop significantly. So we see the blue line is the SPHD. This is back in March of 2020. That is during the COVID crash. There was no protection, and if you had invested in SPHD, you saw the shares drop down to almost $25 a share. That is huge. So just because it advertises low volatility does not mean that if there's some crazy depression or something that comes up, you aren't going to be affected. So just keep that in mind. Now, another quick comparison I could show you real quick is if we look at SPHD, if you had invested, we'll say $150,000 into that, or if you had invested $150,000 into VOO, V-O-O, which is an ETF that follows the S&P 500. Now, we are not going to reinvest dividends. We're going to use Portfolio Visualizer. And the reason we're not going to reinvest dividends is because SPHD is one of those funds where you want to hold the asset and only use the dividends for your passive income or to pay your expenses if you're retired. We're not really looking to sell the underlying asset. You can if you want, but really you're just looking for that monthly payment. So yes, in terms of total portfolio balance, from 2012 until now, you would have gained significantly if you had invested in VOO. But you have to remember that we're not really looking for the net asset value growth. We're just looking for consistent income. When it comes to the income, SPHD on a monthly basis, this shows annualized, had a really strong return. You're looking at $6,500 versus only $3,500 of your investment. On the year we'll go to 2016, you're looking at over $9,000 compared to just around $4,500. So you're seeing almost double the dividend return versus VOO. Now, yes, obviously, if you are withdrawing from VOO, your overall return is going to be greater. But if you are just trying to primarily live off dividends and maybe leave your nest egg to your children, for instance, then something like SPHD could be a good option. Not for everybody, but it could be an option. So now another issue that we might come across with this fund is the turnover rate. So with it rebalancing semi-annually and specifically looking for the highest paying dividend stocks, the lowest volatility, it's constantly rebalancing. And with that comes changes to your taxes. So if you're not meeting certain requirements for qualified dividends, for instance, you're not going to be able to have 100% qualified dividends if you're holding this ETF. So that's a pretty big downside because you don't want to be losing some of your yield to paying the man. At least I don't want to. Now, at the end of the day, who is this ETF for? Well, I think that this ETF is a good ETF. I think it's an average ETF. I don't think it's the best in the world. And I think it's for anybody that wants to diversify their portfolio and give them a little bit higher of a yield overall for their portfolio. So I think that it has a good balance of protecting your assets. And I also think that it's great to see that monthly income. I love the psychology of stocks where you see yourself getting paid, you see that passive income, and you don't see too many dips. That helps you be more consistent when you're actually investing. It also makes it easier in terms of convenience to balance your checkbook on a monthly basis when you get paid every month versus quarterly. These are all really minimal things though. If you don't mind putting in the extra work and taking a little bit more time, then there are much better options with lower expense ratios, better net asset value growth, But at the end of the day, for me specifically, SPHD is one of the dividend ETFs that I hold. I also hold SCHD, and then I also hold some other realty income ETFs because I'm looking for a diverse portfolio that pays me on a monthly or quarterly basis to grow my passive income once I hit the age of 40. And for me, I'm 32 as of a couple days ago, so I've still got a lot of time to build that passive income, and I'm pretty excited. Now, these are separate from my actual retirement investing, but I typically don't talk about my retirement investing because it's pretty boring. All I do is dollar cost average, buy and hold, and I don't ever look at anything. So really not much to talk about there. And to be honest, my actual passive income portfolio, it's kind of boring too, but I still like talking about it. So if you found anything good in this video, leave me a comment down below. Do you hold SPHD? Have you sold SPHD? What are your thoughts? I do my best to reply to every single comment on all my videos, and I hope to see you guys in the next video. Take care.